All righty. And today, Wednesday, May 27th at 8:05. Yeehaw. And I think gold. I think gold is probably more the story as it continues its downward trend. Now trading 44.33, down almost 70 clicks this morning. And it doesn't look good for gold. Like anytime, you would think that it would catch a bid, there just is nothing there. And I think it has more to do with dollar strength. Dollar looks really strong here. Really making a pretty strong comeback, getting back up near this 100 handle. And I think it has more to do with that than anything else, because it is definitely not crude. Crude has come down quite a lot. We're well down below $100 now. We've been sitting about 90. I do believe we've even come down about 89.76. So we have actually even traded in the 80s. And overall, I mean, again, I've been kind of repeating it. Not that I'm right, but I've been repeating it that what I've seen in gold is just not a good sign if you're bullish, right? I mean, if you're bearish and you've already been shorting it or you're short gold, congratulations, you're on the right side of the trade. I do, however, see a substantial amount of support down here at about 43.04. And if and when we do get down there, perhaps that's maybe the end of the bearish cycle here for a gold, but who knows, right? Anything can happen. It's had such a crazy monumental run up. It stands to reason that it would have, the reverse when it does, in fact, come back down to earth. And that is really all I have to say about that, because nothing in gold. And even when I start, grinding in here and getting down to a 5-minute, this is a pretty big move down. Probably the biggest, and it looks like the biggest we've had in quite some time, in over a month. And again, I'm not one to do, I'm contrarian to a degree, but it just looks to me that the trade south and the short trade in gold is a lot easier right now, because there seems to be a decent amount of momentum in that direction, that if you do get short, you have a higher probability of getting a sustained move, where the rallies in gold just haven't really had that staying power that they once had. So there's that. You can actually even look into some of the other metals, but they do not look as bearish. So when I look at copper, copper still looks like it's kind of holding its own a bit, much more so than gold. Likely the reason copper's holding up is because of all the data center construction. And, what's going to go in data centers, right? Copper, right? They're going to be running wire. They're going to be running power. So there's that industrial angle to the other metals that I think has kind of kept them from the slide that gold has had. Even silver looks a little better on the chart. You can even make a case that it's wedged. Now, I don't trade silver much at all. In fact, at all, I don't. I just don't. Just don't trade silver. I never really liked trading silver. But you do have, a definite wedge going on here that it is kind of developing. And again, I think it has more to do with the industrial angle of these other metals, where gold, its only sole purpose really was inflation. A lot of people were using it for currency hedge against, printing money, whatever, blah, blah, blah. I just don't see it there. And then you look at gold in the same time frame, and it looks terrible. It looks terrible, distinctly different than all the other metals. So anyway, that's kind of my take on gold. Just trade with care with gold. I have not really traded it much at all, even in the overnight, even at the night session, because the price action it's been trading, as I said. Gold is trading like gold trades, like normally. This is usually how it trades. Normally, what we've had prior to March, it was just parabolic. It was just not what gold normally does. And so that's really all I have to say about that. I don't really have much else. You trade your own system, your own. I even start grinding in, because if I was going to be looking for a quick trade in here, I just don't see anything where I'm going to be like, yeah, all right, yeah, I'm going to buy long or get long gold here, because it just looks terrible. It looks absolutely horrible. And there's nothing here that's telling me, yeah, it's going to bounce here. Just not. So there's that. And then you move over into equities, and again, it's wash, rinse, spin, repeat, buy the dip, buy the dip, buy the dip. And that has been the trade, and that continues to be the trade, not just in the NASDAQ or the ES or the Dow. It's been the Russell. And the Russell kind of closing in on 3K is a big thing. It's probably bigger than I think anybody's really making it out to be. And the reason is the Russell's such a broader, I believe, just a broader, more, I think, level index, where it's not so weighted with just a few amount of stocks like the NASDAQ and the S&Ps. I mean, let's face it. The S&Ps are basically the top 10 stocks, and that's how it's weighted, and that's what they chose to do with it, and the same thing with the NASDAQ, and so go those, so goes the market overall, and so that's kind of what they've created. But the Russell, on the other hand, doesn't really have that issue. It's much more flat. And the fact that it did break new highs and break all-time highs yesterday here, and it looks like it, going to continue to do so until I don't know, whenever. But as far as trades, I mean, I kind of like this spot down here in the Russell today. This is an R2, or is that an S? Yeah, that is an R. Yeah, that's an R2. I kind of like that. You have a number of touches here throughout the last day and a half. So I'm actually going to put an alert in here at 29.31. We're not very far away from that. 29.31. And, look to possibly maybe get long down in here. Yesterday's highs, 29.28.20. All right. And so that is really it in the Russell. Here, obviously, there's a sell a little double top on the 5 minute, but all-time highs. If you have the balls to go and short the highs, that's fine. Go ahead. Not my cup of tea. But that is kind of it in the Russell, because when I start looking at an hourly, it's just parabolic, right? You don't really have anything up here to really sell. I mean, there's the R3 2954, whatever. But I do like that area up here. I don't know if we actually get there. It's kind of ways away. We'd have to have a pretty decent sell-off to get down here at S1, but that spot looks pretty interesting as well. And that's it as far as the Russell. NASDAQ, on the other hand, this thing is just, I don't even know how you even short this. It's, I mean, you can, I'm not saying you can't short it. You can short it in the short term, but this thing just continues to it's just absolutely mind-boggling. And I say short at your own risk. We are now like firmly over 30K, 30,261 and change. Just, I don't even know what to say. I mean, it's, yeah. Again, wash, rinse, spin, repeat. And I have to honestly say, I have not, and I keep saying it over and over again, and I know I'm in a couple of, chat rooms as well, and I keep repeating, and I know I'm pissing people off, especially, I'm going to call them like the evaluation, the funded trader gurus. I always keep saying, when I keep seeing the market go up and make all-time highs, I keep saying, it's a great day, another great day for real investing money. And I keep saying that, and and it is. And when I do see this, that it is a great, and what I mean by that is like, look, if you're long stocks and in your investment accounts, and you're long, you even have ETFs or mutual funds or something like that. These are great days to have those, because those are going up passively without having to grind through all the bullshit and trying to manufacture trades and sell a trade room and try and sell a course or whatever, these clowns out there are doing these days to try and make ends meet. To try and justify their existence. You're just quietly, and I know I'm just quietly, passively, putting up 2, 3, 4, and in some cases, $5,000 just passively, just sitting there watching the market. And to me, that's a beautiful thing. And when I see that happen, I just walk away from all my, I have funded accounts. I've told everybody that now. I have a couple of them now, and I just walk away from those, because to me it's like those are the accounts that I try to manufacture money when the market isn't really going, or market's going sideways and it's just kind of churning around and nothing's growing that I have. I use those to kind of supplement the growth. And that's what they're there for, folks. Don't kid anybody. Don't kid yourself. They're not there to people to make a living off of, and quite frankly, it's a little scary that there's so many people now reliant on this prop firm kind of, and I'm going to call it what it is. It's crack, this prop firm money crack that, look, eventually those things are going to come to an end. They're not going to have these like ridiculous payout, situations that they have to pay people out on fake simulated accounts. They're paying people out on simulated money. I mean, sooner or later, right, the rubber meets the road. And if there's not enough people buying combines and I don't think there is, folks. I don't think there's enough money there. And I've been saying it for a while, and it's going to, and the minute it changes and all these prop firms and the money dries up and you start to see consolidation, which I think it's coming, there's going to be a lot of people who are going to be kind of out of business, not being able to do that, not being able to have their own money and trade their own money. So anyway, that is that, and that's the deal with the NASDAQ. Again, I don't see any there. Look, buy the dip. That's all I'm going to say. I don't know what else to say. I'm not going to sit here and grind through and say, yeah, mom. I mean, look, if you want to short the highs, go ahead. Just use a tight stop. And if you get stopped out, just walk away. That's really it. I mean, that's really the only trades there is. Now, on my front, I had done a couple of trades yesterday. I did add to my Walmart. So I did sell some puts. I sold a 115, 110 put spread in Walmart in July. So I did add to that. Because as I always say, I do what I say, and I do what I say if I try to. Walmart actually got hit a bit yesterday. I had every intention on doing the 120, and I had every intention on doing a $10 wide, but since it did get hit a little bit yesterday, it did spook me out a little bit. Not that it made me scared, but it did just make me realize that, hey, maybe I should step into this one a little lightly instead of kind of going in heavier. So that's why I decided to just do a 115, 110 with the intention that, look, if it stabilizes here or even maybe, stays around in this area, I will do another trade and just make it a 2-trade type of situation here with Walmart, as opposed to just kind of going in and doing one. So that's why I decided to do the 115, 110. I still think it's a good trade as well, even here being at 118. Still got a decent IV rank. Again, if you look at this historically, it is actually well above. I mean, Walmart's a stock that, when you look at IV rank, it normally runs under 20. And the fact that it's up in the 40s and it's stayed up in the 40s just tells me that, yeah, it is still probably a decent time to sell a little bit in here in Walmart. And so that is what I had done. And I also saw Mongo, and I was looking at, I was trying to find some headlines on what was going on with Mongo. I couldn't find anything. It was just that, there was this crap, and I don't even know what I was like, and then I saw there was some director, selling shares. Like, yeah, so what? That shit happens all the time. They're always insiders selling. I don't usually make a big deal about it. So what? They all do it. So I had decided to go into a little iron condor in Mongo. And so what I had done, where is Mongo? This is what I had done in there. I did the 245, 250, 295, 400. But knowing that, and the reason I did that is because Mongo has earnings coming out tomorrow after the bell. So that's why I kind of did it early. I seen that it got hit yesterday. It was down about, what was it down about? 10, 15, 20 points or so. I see it's off again today by about $5. I still like that trade. That, to me, is a decent trade. I went in June only because, it's going to be an earnings trade. And I think if you sell outside, expected move is $55. I'm just outside the expected move on the put side and well outside the expected move on the upside. I did the 400. And the reason I landed here, folks, is because of once you get over 400 here, they're all $10 wides. And I really was not in the mood and really didn't feel like I wanted to do a $10 wide because, as you know, when you do a $5 wide iron condor on both sides, you're generally talking between $300 and $400 worth of buying power with a trade like that. But if you do 10 wide, you're normally looking at $800 or $900, and I wasn't really feeling it. Then I wanted to use that much capital in a trade like Mongo. The other thing that's nice about Mongo here is it is staying bid as far as volatility. As you can see here, volatility is definitely very historically high. You can see it has run somewhat high before earnings, and that's relatively normal. So, and then the fact that it is up in this area before earnings is also gave me the opportunity to say, hey, look, I'm going to do something here in Mongo. And that's what I had done. I had put the little iron condor on in Mongo. So anyone not familiar with Mongo, overall, Mongo is basically a database that's offered in the cloud, mainly Azure. I do believe it's available in Google and AWS as well, but their predominant offering is in Azure, and it is one of the, I'm going to call it the premier NoSQL type of database that's used for pretty large enterprise implementations. And so that is kind of the story there with Mongo. I still think there's some nice trading opportunities here in this, but just be aware that they do have earnings tomorrow. And I'm kind of just getting ahead of things a little bit there on Mongo. As far as other earnings, I see Costco, and Costco, they come out after the bell, so I will kind of hold off on that one, and I don't really see anything today at all that looks remotely interesting. Again, we're kind of at the end of the cycle, and the only one really left in here I think worth trading is probably going to be Costco. Yeah, it's probably going to be Costco, and then I think we kind of run out of gas, and then we do have Broadcom, which would be the third would be next week, and then that one we'll wait till then, but I don't really see any of these other ones being worthy. I'll look at Costco here real quick. Costco's always been quite good volatility rank in here. Very historically, extremely historically high here on Costco. And tough one to trade though, because again, because of the price being $1,000. You don't in here, even in June, I would expect there to be much better open interest in here, but you're just not. Look at this, you're just not seeing it. This is June expiry, and just not seeing it. Not seeing it. And overall, you look, liquidity is horrible in here, and it really has everything to do with that price. Unless they're going to split, and I haven't heard anything about it splitting. I wish it would. I think it would add a lot of liquidity to it, but nonetheless, this is a tough trade because, excuse me, being $1,000, it sucks. But if I were going to be doing anything in here, I could see myself landing at about the 950s. And I think they do, I don't know how far up the 5 wides are. I would definitely go out to a 1080. See a lot of open interest out at these 1100s. Let's try that. That's not a bad trade there, in my opinion. Is the 590, 545, 1095, 1100. If you could do that for $1.55, just be aware, just be very aware that this will be a bit of a pain in the arse to get rid of. And I only say that because you don't have a ton of liquidity out there in this. And again, with this thing being $1,000, this is kind of turned into like the old Amazon trades of old before they split. When it was $1,200 and $1,300, it was just sucky to trade. So just be aware of that. But something like that looks pretty much in like my wheelhouse of what I would do. I don't have a problem being inside on the down, on the put side and outside on the call side. 22 days, so it's kind of like, to me, it's right in the wheelhouse of being able to do something there. And yeah. And then outside of that, there's like, I don't know, man. It's slim pickings. I'm 27 minutes in, and it is slim pickings out there. Take your pick. Micron had just a monstrous day yesterday, up $144. I don't even know what to say about that. This is insane. It really, really is. It's absolutely insane. I mean, the likes of all these chips, SanDisk, Micron, but Nvidia, right, just does not want to play in these reindeer games. Even AMD getting a lift, even Intel as well, Broadcom, but Nvidia just not playing in these reindeer games at all. Kind of very weird. I mean, I don't know what it is, but it is. I just find it very, very weird. And then, taking a look at software again, some of these software stocks looking pretty bleak. Now, I think CRM has earnings coming out this morning. Yes. Is it this morning or tonight? Is it tonight? I don't even know. I'm not going to trade it. I hate CRM. I think I actually own some of it. It's a piece of crap. It is garbage. Salesforce is garbage. It just says the 27th, but I don't see. I think they do come out after the close, but I don't see. It doesn't say. It just says it comes out today. So yeah, I don't know. I don't really have any. I have no real skin in this game. I'm not trading it. My opinion about many of these software stocks, and I'm not lumping in like CrowdStrike and even to a lesser extent something like Palo Alto Networks, but what I'm looking at is like more SaaS type of software, not consumer, but business management type of software like ServiceNow, which is a fucking ticket system. Let's face it, it's a fucking ticket system. So is CRM. It's a fucking ticket system. Workday. It's a fucking. These companies are just over. I can see why they're having so much problems. They just can't seem to get out of their own way. So I'm still in that camp where I just think these software stocks are going to have another reckoning coming. And that's kind of it. Apple kind of still doing what Apple does. Just slowly, methodically, just going higher, taking shit. Oh, they haven't innovated. Zuckerfuck said something the other day, like, Apple hasn't done anything. Yeah, but you know what? Just keeps fucking churning out the revenue more so and than your shitbag fucking outfit that is kind of on its ass right now. So like, shut up. Talk about innovation. Like, what the fuck have you done? What the fuck has Meta done in the last fucking 10 years? Nothing. You've done nothing. You've provided no value whatsoever. So like, the fact that he even said something, I was like, I'm not sticking up for Apple. Like, he's right. Yeah, maybe they haven't innovated, but one thing they have done that your company has done is they fucking grow and they fucking make fucking money. And they basically print fucking money. More so than your shitbag outfit. So, that basically sells titty pictures and, chicks in bathing suits. So anyway, so Apple doing the things that Apple does. Even Tesla is kind of getting a bit move. I think more of the move in Tesla of late, I think, has more to do with the SpaceX IPO and what's going to happen with Tesla. I think there's a lot of speculation that SpaceX will take or buy out Tesla. I mean, I don't know. I wouldn't buy Tesla on that, rumor or hearsay. But anyway, that's doing what it does. And then, as far as AI stocks, these things all continue to just bang it out. Totally bang it out. I mean, again, they don't look great from a long-term perspective, but they have kind of made a little bit of a push back and kind of pulled themselves out of the doldrums. I wouldn't per se they are back totally. They still look a little weak to me. They still look a little weak. And I look at the likes of, like, there's a couple that still look really strong, like NBIS is another one where I continue to sell in here. Had a bad day yesterday, which is great for me. But a lot of these stocks have kind of, I think are eventually going to run out of gas. I mean, these don't have the horsepower that some of those chip makers have. And so that's it. That's really all I got. I am going to wrap it up. I don't really have much else to say. I do think there was some numbers that just came out. Nothing. There's nothing. I mean, and then like what's coming out tomorrow, building permits, ho-hum. None of this stuff actually is really going to move anything. So there you have it. And that's all I got. So have a good one. Trade them tight. We'll take a look at Costco tomorrow. We'll take a look at that one.